The housing market has cooled off, but there's still a lot to talk about. In this video, I've got the latest housing market updates. Even though the housing market has been cooling off, rental prices continue to soar, and lumber prices were all a scam? You won't believe what all the sawmill companies are planning to do with their record-breaking profits from last quarter. And sellers are now starting to realize that the housing market is cooling down. However, last week we did see some increases, so I'm going to break those down and everything else that happened last week in this video starting now. So let's get right into it. As we continue to see the housing market slow down, pending home sales have seen their smallest increase year over year yet, at only 7% from last year. This also comes as the supply for houses are still slowing down as well, and this is in part due to the natural seasonal decline as we move into the fall. But I think one of the things that shows that the market is really cooling down is that sellers are realizing that they can't ask crazy prices for their houses anymore. The housing market has shifted and asking prices have been sliding since their record highs in June. We have been seeing an increasing number of houses get price cuts during their listing. Though it's a small number, 4.5% of sellers have had to reduce their asking price. And this is the highest percentage since November of 2019. So it's certainly been long overdue. But even though the other metrics of the housing market have slowed down, home prices still increased to 19% year over year. And this brings the median housing price sold to $364,000 from $306,000 last year. But we've also seen a significant decline in active listings. Active listings are down by 28% compared to the year prior, and 51% of pending sales went under contract in under 2 weeks, with the number of days on the market ticking up to 15 days. And finally, we saw 55% of homes selling above list price. But this number has been going down ever so slightly since the end of June. We've also seen a continued decline in new construction home sales. In June, they hit their lowest levels since August 2020. They are down by 6% for the month and almost 20% year over year. And experts had expected new home sales to increase by 3.4% in June, not decline by 6%. But even though sales are down, prices are still increasing. The median price of a newly built home rose by 6% year over year in June. This is down from nearly 15 to 20% that we've seen over previous months' annual gains. And many of the homes that are being built right now are on the higher end of the market, as builders say that they can't afford to build cheaper homes with the prices of construction materials so high. So with construction costs like materials and labor so high, it's very hard for them to build affordable housing at this time. And this only adds to the housing shortage, especially on the entry-level home side. And I've talked about this in previous videos about how the entry-level market home is getting screwed. And as a follow-on to that, I've got updates about lumber prices and how they were all a scam. Let's get into that and talk about what's going on with lumber prices and what sawmill owners recently said about their profits. Newly released numbers show that sawmill owners made huge profits when lumber prices spiked in the spring. This is when we saw record-breaking lumber prices at $1,670 per 1,000 board foot. Two companies in specific that make 2x4s and wood panels reported record-breaking profits for the second quarter, and their record-breaking profits were so high that they made more money in one quarter than they usually do in an entire year. And though lumber prices reached their peak levels in May, lumber prices have continued to fall since then by more than 60%. Last week, lumber prices remained mostly unchanged from the week prior and closed out the week at $621. This is down by only $13 from $634 from the week before that. But how did sawmill owners make so much money last quarter? While it's true that sawmill owners had to pay higher costs for transportation, higher costs for wages for workers, and higher costs for energy, their cost to buy logs only rose by 3% last quarter. This brought the cost of logs up to $25.41 per ton of logs. And this is about what the cost was a decade ago when the housing boom was still going on. So even though they increased lumber prices significantly, the actual cost to make the lumber didn't increase that significantly to justify the amount that they increased them by. And so that's how you have these companies making record-breaking profits in just one quarter. So where exactly are they spending these profits? For one, they are spending a little bit of money on increasing the output of their lumber mills to account for increased demand. However, what they're really doing with a lot of these profits is rewarding their shareholders. They're rewarding their shareholders with special dividends and stock buybacks. This comes after they say that their shareholders have suffered a decade of low lumber prices and low profit. profits since the 2012 housing bust. PotlatchDeltic said they would pay a special dividend in the fourth quarter of this year to their shareholders. And they said it would be multiple times higher than their current payout of $1.64 per share. But they wouldn't state exactly how much they were going to pay out because of the volatility in lumber prices today. And executives at these lumber mills said they don't expect prices to get as high as they did in May, but do expect a price increase due to the wildfires affecting their supply of logs. And Wes Frazier, senior vice president, also said that they believe they increased lumber prices too much in May. But now they think that lumber prices are actually too low. So with all of that, I think it's fair to expect that lumber prices are going to remain pretty volatile for the foreseeable future, and they could start to increase. Last week, we didn't see a major decline like we would have expected, but we also didn't see a major increase. So it's possible that lumber prices could remain around the 600s for a while, which is double what they were pre-pandemic. But based on what the executives from these companies are saying, they could also increase prices again. I doubt we'd ever go over the $1,000 mark again, but we could get close. So we'll just have to keep an eye on the lumber prices and what these companies are doing with all their insane profits. But I think it's fair to say that the lumber prices we saw this spring were pretty much a scam based on what we've just heard from these companies. So now let's move on to interest rates for last week. Last week, mortgage rates remained relatively calm after a volatile week before. Mortgage rates for a 30-year fixed rate mortgage ticked up to 2.8% from 2.78% from the week prior. However, this week, mortgage rates could become more volatile as we've got economic data coming out this week as well as COVID numbers for the month, with COVID cases expected to continue to increase month over month. But this should keep bonds from selling off in large numbers. And with interest rates remaining incredibly low, we saw an increase in mortgage applications of 5.7% last week. We also saw applications to refinance increase by 9%. But this is still 10% lower for the same week a year prior. As investors continue to have growing concerns about the pandemic heating up again, the 10-year Treasury yield fell last week. And with rates staying so low, more people are refinancing into fixed-rate mortgages to secure these low rates for the duration of their mortgage. And overall, the number of purchase applications have continued to decline on an annual basis. This is now the third month that we've seen a decline in home purchases from the year prior. This comes as more potential buyers are getting fed up with the housing markets being so competitive and being so expensive. And many of them are turning back to the rental market. And that leads to rental prices seeing staggering increases. According to Apartment List, rental prices have increased by 2.5% from June to July alone. This is a significant increase considering pre-pandemic years only rose by 3.3% between January and July, a 7-month period in total. And to put that number in more perspective, in the same period, January to July of this year, rental prices have increased at a staggering 11.4%. That's a 400% increase over normal years. And while medians don't necessarily mean that every market is experiencing the same amount of growth, this chart from Apartment List shows that the top 100 cities are recovering and increasing in rent prices. And many cities that were hit hard by the pandemic have also seen significant gains as well. We now see that rents in many cities are now above pre-pandemic costs. Overall, most cities have seen rental prices fully recover and even increase. There are only a handful of cities that still have rents lower than pre-pandemic levels, but those numbers are quickly catching up. And this is also fueled by inventory decreasing, in part to potential homebuyers that have been burnt out moving to the rental market for another year instead of buying, and also as the economy continues to rebound. So that's everything that happened last week. Check back next Monday for my next week's housing update. Thanks for watching and see you next time.